have you ever had an idea for a company only to realize that that company already existed? This is what our next guest, this is what happened to me with our next guest. So I thought like, about 5 years ago, I thought I had this idea, this great idea. I was like, there are so many families out there with an extra car, like a third car. There should be a way for those people to lend their cars out to Uber and Lyft drivers who don't have the money to buy a car. That you can just match up drivers with your extra car, let them drive your car for you and have your car make money and have some sort of a rev share. Well, turns out I'm not the first person to have that idea because that company already exists, and that the CEO of that company is here right now, Joe Furnari from HyreCar. Joe, I think I see you're on mute. Can you just unmute your microphone right there on the bottom of the screen? You beat me to the punch by a couple years, Joe. I thought I had a good idea. I guess I did, but I wasn't the first.
Well, sticking with the theme of complimenting Spencer, you're a genius, and you are correct. There was a need to utilize underutilized assets, and that's kind of what we did. So let me know. You want me to run right into the presentation?
Yeah, you can go. I have your slides up on the screen, so you can just roll right into it.
Okay, great. Well, let me tell you the backstory a little bit, and then we'll get into kind of the exciting things that we're doing now. Really, it started back in 2015 where I needed to rent my car. I had a car in the garage. I wasn't doing anything with it. Actually found HyreCar. Turns out when I posted my car to the marketplace, I was the first person to rent my car on the market. And so was a really early on adopter of the technology, was a really early on adopter of kind of this car sharing marketplace that we've built. And so as when I first came on, I think of the 10 cars that we had between my brother and I, we represented like 90% of the active cars on the platform. So at that point, this was Q4 of 2015. Q1 of 2016, we had kept in touch with the founder who was, an engineer who had a great idea. And he was looking to do a little friends and family money raise. So I was at the time I was working for the Bank of California, but had major banking experience. So I decided to quit my cushy banking job and jump headfirst into this tech startup world. So we were 4 guys sitting around a Starbucks, borrowing free Wi-Fi at that point. With 10 active cars, and we've grown it to, a little over 4,000 cars at this point on the marketplace in the last 5 years. And along the way, took it public in 2018 and have been running ever since. So this is what the market is today, right? We are an online platform similar to Airbnb or Turo, where vehicle owners like myself, peer-to-peer, and now more recently, commercial vehicle owners like mini fleets, rental car companies can post their cars to the marketplace. Uber, Lyft drivers can come rent vehicles. It's a very specific niche that we've carved out for ourselves, and that we rent only to gig drivers. These are drivers who drive for Uber and Lyft and Instacart. Essentially, they use the car to make money on these various sites. And so we have this transaction where drivers and owners meet on our platform. We wrap it with a commercial insurance policy that enables those drivers to go drive. And then they go off into the world and make money. So it's actually one of the easiest sells in the world, because you're giving somebody a car, you're giving somebody a job, and you're really helping with their kind of upward mobility and society in general. What's interesting recently in COVID, it's actually the silver lining of COVID has been that this business has been additive. So not only now did you have ride sharing, but now, which is Uber and Lyft drivers, but now you have delivery services that have come up. COVID accelerated Instacart's business by 5 years into the future. Same with DoorDash and Postmates and Grubhub. And so what that's created is kind of a dual tailwind for our business. As you have ride sharing coming back in all the cities, you also have delivery remaining strong and will continue to remain strong from what we've seen on the delivery side. So pre-COVID, we had about 95% ride share. Today, we have actually about 2/3 of our drivers are driving for delivery services. 1/3 of our drivers are driving for Uber and Lyft. Also, what COVID has done is really thinned out our competition. Now with Hertz bankrupt and Fare, which was another competitor here, bankrupt or out of the business. Get Around is essentially out of the business as well. You have lessening competition in an environment where you have increasing demand, right? You have individuals who are the Great Resignation. They're leaving their jobs and they need to make money. They need a quick way to do that. What better than to go rent your car, turn it on, load it to your Uber profile or load it to your Instacart profile and start driving. And that's what drivers are doing. At that same time of that tidal wave of demand that comes, you only have a certain amount of cars. And actually you've had about 65,000 cars that have left the marketplace that were specifically geared towards renting cars in this system. So main competitor right now is Avis. HyreCar tends to be lower depending on the pricing and the geographies in terms of prices. We're more flexible in terms of the rental length, and we're more flexible in terms of the range of cars our drivers can rent. So you combine that, and it really turns into a pretty good growth trajectory for us in the near and kind of long term. So in terms of how we make our money, these are the unit economics. Typically, a driver is paying about $57 per day. That $57 per day is split as HyreCar fee and as a vehicle owner fee who rents the car on our platform. So in this case, our take rate is about 47% off of gross merchandise value. And it breaks down into 3 different components. We take a fee from the vehicle owner, we take a fee from the driver, and we're taking an insurance fee on top of that. So it comes out to about $27 per day. Also, what we've seen in COVID is that actually those margins are starting to move up for us, right? As there are vehicle supply shortages, chip shortages, supply chain logistics, you actually start to see there's some pricing that we can build into it, which is increasing our revenue take rates, increasing our gross profit margins, and also reducing our OpEx. So we're seeing some positives there as well. From a financial perspective, we are, trending in the right direction right now. I think we have about a break even for kind of where we go adjusted EBITDA positive or adjusted EBITDA neutral is about 6,000 active rentals. And so we are trending in that direction. I think we have line of sight on 3 or 4 initiatives that are really going to move our business and catalyze our business in the short term. So we're excited about that, and we have a pretty healthy balance sheet to be able to get there, having about 28 million at the end of Q2. So we are in a good position to really capitalize. And so I think our risk to the business right now is simply execution, because this greenfields opportunity with cars leaving the marketplace, we're having cars come on with some of the initiatives that we've talked about on the call, and we'll expand on in Q3 call. And so you have this opportunity to really perform, and we need to start moving at warp speed to be able to do that. And I think we have the right team in place to do that. So myself being from having a banking background, Serge coming in recently as the CFO, has mobility experience from Ford Mobility, has technology experience as a senior VP of Twitch, also has experience in the insurance business, which is a big piece of our business as well. Brian Allen, I mentioned some of the commercial fleets that are now starting to rent cars on our platform outside of the peer-to-peer owners, the individual owners with one car. We're focused on the fleets and specialty bot fleets that are purchasing cars and putting them directly onto our site. So really excited about that. Brian Allen comes from the dealership, the auto dealership world. I spent 40 years at Galpin Ford, which was the #1 Ford store in the world for a long time. And so he has a tremendous black book, both at the independent dealership, franchise dealership, and the OEM. So excited to see what he's doing in spearheading the commercial initiatives that we talk about on the call. And then from a board perspective, we punch pretty high above our weight in terms of board gravitas, and we leverage this board consistently. So Jay was the former CIO at Tesla in their hyper growth phase, basically built their full DMS system from the ground up, and is now the CEO at Techion. Brooke, who's at Cars.com, she's the chief experience officer there, so she really helps us with branding, marketing, etc. Mike Root, from a technology standpoint, is the best there is. Was part of the founding group at Riot Games that built like League of Legends. So hyper scalable infrastructure is his specialty, and so we really leverage him on that front. And then Grace reported directly to Jamie at the Change of Bank initiatives at JP Morgan. So we really leverage that board. I think we have a bunch of executors here in the company, and so I'm excited for the future. So with that, maybe Spencer, I give you back a couple of minutes here. Maybe open it up for questions.
Yeah, if there's any questions for Joe, please don't hesitate. Drop them in the chat. I have a question. There was news this week. I'm sure you saw it. Hertz and Tesla, and then today there was another headline, and it was Hertz and Uber, I want to say. So, yeah. Deal making in your neck of the woods seems to be happening right now. Have you given thought to any kind of partnerships like that?
Absolutely. So that is a validation. So it was Hertz initially announced with Tesla that they had agreed to purchase 100,000 vehicles from Tesla. And that's an exclusive, EV deal between Hertz and Tesla. And then today, Uber and Hertz announced that of those 100,000 cars, about 50,000 of them are going to be used to rent to Uber drivers. So, number one, that's a great validation of the way we were kind of moving, which is we're thinking EV. We've pledged to be fully electric by the end of 2030, along with Uber and Lyft. So it's really exciting because it's a validation of the business, and you're starting to see some momentum there. Also, what that means for our business specifically is that the TNCs, that Ubers and Lyfts of the world, are open for business for platforms that can supply cars, both ICE cars. ICE is an internal combustion engine, ICE cars and EV cars. And we have both on our platform. And so in Q2, we announced that we have signed a partnership with one of the TNCs. We were not able to announce it. I think as some of this new news flow comes out, it might start to unblock some of the blockages that were there and making our announcement. And so I'm really excited for that over the next, I don't have a timetable, but I'm really excited for that at this point. So, but this deal does show that TNCs are ready and willing to do deals to bring EV cars onto the platform. So it was an exciting news today.
And then you did talk about how the last year and a half has been sort of an unexpected boom for the business. How much of that is just what we've seen in the used car market, frankly, right? Prices are inverted still, actually. And like what is the impact of that?
Yeah, well, it's interesting. So at a major rental car company level, right, where these companies need to source tens of thousands of cars, there is a major supply shortage. But in the car realm that we're playing in, that HyreCar plays in, where we're just looking at crowdsourcing vehicles and sourcing 100 car chunks, there's still lots of cars at auction in our price range. And so for us, supply has always been an issue, but we're not really affected by the national narrative of supply chain shortages and chip shortages. So another exciting reason why we've kind of been able to capitalize and grow here. But just to underscore one point, I mean, there was about 28,000 leads that came to our platform last month. These are driver leads that want a car. At that same time period, we only post about 1,800 verified cars to the marketplace. So there's still a major asymmetry there that we're looking to address with some of our other initiatives that we're doing with the OEMs, securitization, rental car companies, et cetera.
What is the ideal symmetry? Is it 1-to-1? Probably not, right?
Well, yeah, no, probably. I mean, at least 2-to-1. Okay. And at 2-to-1, for every 1,000 cars that we're renting on our site, we call them active daily rentals. For every 1,000 cars is about 9 million in run rate. So 10,000 cars, 90 million in run rate. And there's a 60,000 car opportunity right now for us to add cars. So I don't really worry about the driver side of the equation. That's going to come, especially once we announce this TNC partnership. So really the main focus for the company now is getting cars onto the platform as fast as possible.
What did you say that wasn't an active what?
Active daily rental, ADRs.
It's another new metric I now need to commit to my memory. So we've got active daily users, active daily rentals. Okay, I'm gonna commit that. Joe Furnari is the CEO of HyreCar. Hey, it's not every day that I have an idea for a company and it turns out it already exists. So HyreCar.com, ticker HYRE. Joe, thanks for coming on. It was a pleasure to learn more about the company. So thank you so much.
Thanks, Spencer.